Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Gabriel Hamel. Thanks for being on the show, Gabriel.
Hey, thanks, Whitney. Thank you for having me on. I appreciate it.
Awesome. Now, a little about Gabriel. He's a real estate investor whose passion for real estate, business, and financial freedom has helped him to amass a multi-million-dollar real estate portfolio consisting of single-family homes, multifamily apartments, commercial real estate, and mobile home parks. From humble beginnings, a book on real estate, and a strong desire for financial freedom, he set out to find creative ways to start purchasing income-producing investment real estate. He's a strong advocate of financial literacy through self-education. Gabriel, thank you again for your time and being willing to share your expertise with the listeners and myself. But give us a little more about, about what you're up to, your focus, and then, I'd love to dive into just your focus on this financial freedom.
Yeah, absolutely. So, let's see. We can go back to, let's say 2002. I read Rich Dad, Poor Dad for the first time. And it just opened my mind to some other possibilities. Academia, college was definitely not on the forefront of what I wanted to do, and it didn't make sense for me. And so after reading that, I got set on, hey, I'm gonna build some wealth and create some financial freedom through investing in real estate. And shortly after that, I was deployed to Iraq in 03 and 04. And so oftentimes over there, I thought about the lessons I learned in that book, and came back in 04, got out of the military in 05, bought my first house in 05. And that was kind of the start of it.
Thank you for your service.
Absolutely.
Yeah, I was in Iraq all of 05. We just passed each other, I think.
Oh, okay. So, what branch were you?
Army.
Army, okay.
And you?
I was also Army. I had joined the Army National Guard in an infantry unit in 99, and I got a call in 03, and 5 days later I was gone.
Wow. Well, thank you again for your service. So you came home and tell me, what you bought in 05, and then let's kind of quickly go through the progression to, scaling and what you did to gain this financial freedom.
Yeah, it was an interesting progression. So 2005, I go to the bank with really no money or a job. And this is during the subprime, and the bank said, we'll give you a loan. It was a no money down loan. And I rented out 2 of the bedrooms. It was a 3-bedroom house. I rented out 2 of the bedrooms and lived for less than I could have lived anywhere else. 2006, I opened up a small nutrition store with a friend of mine and went back to the bank in 06. They gave me another no money down loan. And I'm thinking this is too easy. It's just no money down. Banks are saying yes. And there's not a lot of paperwork. And I do the same thing in 07. And so and that time they wanted 5% down, which still seemed pretty reasonable. I'm thinking this is easier than the books. This is, I'm just going to keep doing this once a year. 2008 rolls around. I shut my store down because it wasn't making any money. My first son was born, and I started working some odd and end jobs, really minimum wage type jobs. And I went back to the bank and said, hey, I want to do this again. And they said, slow down. Guidelines have changed a lot. You actually need a down payment. They told me I needed 30%. I had been spoiled with no money down loans. I didn't have 30%. And they also said you need years worth of, income and tax returns and showing that you can qualify for a loan. So guidelines changed a lot from, say, 2005 to 2008. And I wasn't going to let that stop what I wanted to do. So I continued to take on some odd and end jobs. And in 2009, I bought my first 2 duplexes side by side, 4 units, and that was with seller financing. And I quickly realized just the advantages and power and the win-win scenario for the buyer and the seller using seller financing, that the cash flow from those 4 units replaced the income I was making at my job. Now, I wasn't making a lot, so it was a very obtainable and achievable goal to say, I will replace this income and then find some properties to do that. I spent countless hours and every night on Craigslist searching properties, knocking on doors, making phone calls, hundreds of conversations, hundreds of relationships, and eventually found the 4 units that was able to replace my income and create a really nice seller financing tool right there.
Nice. Wow. So tell me now, where you've came since, since 2009, kind of to what your focus is now.
Yeah, so from 2009 all the way into say 2012, even into 13, I really focused. I continued to focus on seller financing, and so I just continued that. I did almost all no money down loans. I found sellers that understood the advantage of carrying the financing, and so these were properties that a lot of times were poorly managed, under rented, had some deferred maintenance. And the sellers were just tired. They were tired landlords, great people. Most of the time, they had owned the asset for 30 plus years, so they had already depreciated the value from a tax standpoint. They didn't have a loan, so they didn't have the interest write-off. And a lot of times they were busy, running their own separate business or a different job, and the real estate was a part-time thing. And so they were just burnt out. They were landlord, they were maintenance person, they were handling turnovers and repairs and all that. And so I was able to just create a scenario for these sellers. So I did that all the way up through 2013. 2014, I refinanced a bunch of the seller financing deals and then continued to buy.
Nice. So is that still where your focus is today?
Yeah, I really don't use any traditional financing whatsoever other than on refinances. And so, those first couple properties, I don't know if you can consider those, traditional financing being the subprime. But I do like to buy with seller financing and then later convert to longer term fixed financing. Although sometimes the sellers, I do have sellers that will finance a deal sometimes 15 to 30 years, depending on what their needs are. And that's really a lot of it, is really listening to what the sellers want and seeing if I can structure a deal that gives them as much as they possibly want and still make the deal work for me. And so I love the creativity of seller financing. It's different than the bank telling you, hey, here's the terms, here's the down payment, here's the interest rate. Seller financing really is as creative as you and the seller can get.
Love that. It's creative as you and the seller can get. And, and obviously this is the real estate syndication show. Seller financing is so seems almost opposite, right, of syndicating
Sure.
a deal. However, I love bringing somebody like yourself that's an expert in that. So it helps open our mind a little bit to other options, right? And
Sure.
even understanding the value for a seller to seller finance can really helps our lingo and the way we, understand the benefits of a seller, of seller financing, for a seller, and being able to talk through that. And so we don't close that option off. And so I'd love to dive in a little bit to, to those benefits and us learning, that conversation a little bit and understanding how to present that. So it is a good option for the seller.
Yeah, absolutely. So initially after I'd done a couple deals, I thought to myself, oh my gosh, this is amazing. I need to go educate all these sellers on why they should carry financing. But after some reflection, I realized that every seller that carried financing, they already wanted to carry financing. I've never had to talk a seller into it. I've never had to educate or convince a seller. Now, not saying that you couldn't, but every seller who's carried financing for me they're typically men and women in their 60s and 70s. They generally have multiple properties. So they've been landlords. So they've built a significant amount of wealth through real estate. And then the reasons that they want to carry is, they don't want to pay a huge capital gain up front. They don't want that, you pay them off, you pay cash for the property or go get a loan and they get a lump sum of cash. Now all of a sudden they're getting hit with a big capital gain right at one time. The sellers that want to do this, they're after income. And so you've created this new level of passivity for them where without them being landlord, they still get a monthly payment. They get a check every month. And if say you were to pay them off, now they're left with a money problem of, hey, not only are they hit with that tax, but now they have to put that money somewhere. And, at 60, 70 years old, a lot of times they're not going to want to put their money in the stock market. They're not wanting to go out and actively invest because now they're having to look for deals and manage property again. So it really creates this perfect scenario where you're giving them a level of passivity and security that's backed by a property, backed by an asset that they're already comfortable with. And it's just a true win-win. It really comes down to to relationships. As I said before, a lot of these sellers have multiple properties. And so, you show them that, you're trustworthy and you do what you say. It's amazing how many times sellers will come back and say, hey, I'd love to sell you another property. And it takes away the competition of having it on the open market.
How are you finding those sellers?
My best seller financing deals are true. It's just true, genuine, word of mouth, building relationships, telling people what I'm looking for. I've never done any kind of mailers or mass marketing or advertising at all. I used to think, and up until recently, that at some point to scale, I would have to start marketing, and I really haven't. I mean, the best deals have been off market deals through relationships and networking, and that's not only with agents and brokers, but that's just telling people, hey, this is what I'm looking for. Early on there was a specific neighborhood, and I was into small multifamily, and so I told people, hey, I'm looking for small multifamily in this neighborhood. Now I've moved, and my focus is value add mobile home parks, and so I have a lot of those conversations, and it's amazing how many people say, oh, hey, I have a park that's coming up for sale, or I know someone's selling a park. Are you interested? And it's just genuine, organic relationships.
Is it only markets that's close to you or local, or is it anywhere?
Yeah, the majority of my stuff is within 15 minutes of where I live, and my mobile home parks are about 30 minutes and an hour away. And I never planned on just investing here, but going back to just relationships, and then also knowing the market. I know the submarkets really well, so I know not only that, hey, here's a desirable town, but here's the areas that people want to live. And I think that's really important to know the submarkets within the market.
And, tell me about how the seller's protected. Do they have a lien on the property? How does that work a little bit?
Yeah, they take a first position lien most times, just as if a bank would. And so rather than getting, going to Wells Fargo and getting a bank loan and Wells Fargo having the first lien position, these sellers are taking a first lien position. And so if you were to default, never plan to, but they have security in the property. And in most cases, you're improving the property, getting better tenants in there, getting better rents. And so if you were to default, they're getting a property back that they've already owned in better condition than they had it previously.
Nice. And I know something you are passionate about, it like building financial freedom, and you talked about just time freedom as well. And I love that, just owning your time. And I'd love to get into that a little bit if you could elaborate.
Yeah, really, it was kind of a process. So I was really focused on the financial freedom aspect. And as I started buying properties, and the first several years I'm managing my own properties, and I'm realizing like, hey, it's a lot of work. And I enjoy putting deals together. I enjoy that process, the creativity of coming up with a deal structure that works. I like analyzing deals, but I didn't like managing properties. At the same time, I had a friend that was starting a property management company. So I started building up enough units where the thought was, do I want to create a property management company, or do I want to hire out? And I'm running the numbers, but then I'm also looking, what's my return on time? And I'm seeing this friend of mine having to deal with tenants, and having to deal even more so with employees, and kind of building this up. And he really created this job for himself. And so, I realized, why do I want financial freedom? Why is it that I want that? And I realized it wasn't so much about the money. It was more about my freedom of time. I want to be able to do what I want to do, when I want to do it, how I want to do it. And that was really important to me. And so when I started making decisions around that, I just naturally went to, okay, how does this affect my time? My family is important to me. How does it affect my time with my family? How does it affect my time on my health? How does it affect my time if I want to travel? All these different things that are important to me outside of financial freedom. And so not starting my own property management company. I've never had employees. I don't want employees. That was a real big reason why I chose not to start property management. And just as I go into a decision with any business related deal, or really just anything in my life, I go right to, hey, how will this affect my time with the things that are most important to me?
Love that. Yeah, it's awesome. I mean, we're all doing it ultimately, I think, for more time with the family, or something that's, very important to us. And so but in the moment we can get caught up with thinking we're going to self-manage to save some money or whatever, not realizing that, oh man, the time commitment involved with that.
Yep. And you nailed it right there. And I started getting in conversations with people, and a lot of it was around financial freedom. But as I dug into these conversations and I was listening to people speak, I realized none of them were like, I did this because I want a big pile of money. I want to swim in a pile of money. It was always something different. Like, I want to be able to contribute to the community. I want to be able to travel. I want to spend time with my family. If my elderly parents got sick, it was all these other reasons that people wanted financial freedom. And you didn't have to dig very deep to realize that. And I think it is easy to get caught up in creating something and a business where, sure, maybe you're bringing in a lot of money, but not considering how does it affect your time, or does this actually allow and give you the thing or the things that it is that you wanted initially, the whole reason that you started building this business or creating financial freedom. And I think it's just important to reflect back and make sure it does align with those reasons that you started it in the first place.
Where's your business going from here?
I want to continue to scale. Like I said, right now I'm focused on mobile home parks. I think there's a lot of opportunity there, and there's a lot of sellers that are interested in carrying financing. I've noticed as I've moved to some larger properties and into the mobile home space, mobile home park space, and also into some multifamily, you're dealing with a little bit more sophisticated investors, and so they really understand the advantage of carrying financing, and so it's just a conversation of, hey, what will work for both parties.
So why not buy them out or syndicate from the beginning?
Yeah, a lot of the reason that I chose not to syndicate, which a lot of times that is the natural and next path. I know this is a syndication show, so I don't mean to offend by any means, but for me personally, it was again going back to how will that affect my time? How will that how much time will I spend on raising capital, and then I have this obligation of other people's money, and that's a big responsibility, time and energy, as you know. And so I considered it for quite a long time. That felt like the natural progression of, hey, I've built up enough assets, and I have on a small scale partnered with a couple people, more recently, a couple of years ago, but I've just chose not to syndicate for that reason. I think it would take up more time than I would want to do.
No, it is a syndication show, but I love hearing why people don't want to syndicate as well. And I want the listeners to hear that and have options, just like seller financing. And syndication is not the only way, but so I love hearing, how other people are doing it too. So
yeah, and I would say, oh, go ahead.
Go ahead.
I was just gonna, and everyone's different, I have friends and acquaintances that syndicate, and they love it. They love the process. They love having a team, and some people just love the grind. I mean, I've met people that are been financially free for years, and they're going to work 15 hours every day, whether they're financially free or not. And they love that. And that's just not me. And so, I think it's just part of just being self-aware of who you are and what you enjoy doing. Cause I definitely have friends that syndicate, and they love the process. They absolutely love it.
So Gabriel, what's been the hardest part of this process for you, or, gaining financial freedom in real estate?
It's been interesting because I was able to build financial freedom, pretty quick. So when I stopped working, I had a level of financial freedom, but I was far from wealthy at the time. And so I lived very frugally for like a good decade, where I was putting everything back into properties. I didn't own a new pair of shoes. I didn't have a new jacket. I mean, it was very focused on, going back into the deal. And that was out of necessity. And so I think some of the challenges, hey, I need to make sure, that I'm still staying true to those principles, but also it's important to enjoy life and make sure that I'm, also benefiting and helping others, and creating a life for my family that is fun and exciting, and the whole purpose that I built this in the first place. And so there's always that balance of, yes, I want to go do amazing things, but I also it's important to be make financial, good financial decisions.
And how are you prepared for this potential downturn that everyone's talking about?
I get asked a lot all the time, like, is the market, do you think the market's going up or down? I don't care if the market goes up and down. And so the market will go down, it will go up, and it'll probably go up and down multiple times in my lifetime. I started buying in a peak market and I bought in a down market. I think it's always a good time to buy if you buy right. I don't speculate on properties in the sense of any deal I ever structure, it has to cash flow. It has to cash flow from the beginning. And so I don't care if my properties go up and down in value on paper, as long as they stay cash flow positive. And so, the last downturn, I spent a lot of time buying. And so I'm prepared to do that again. The people that I've met that lost a lot of money in, the last recession, it was on speculation. They were buying based on this property has to rent for more, or this property has to be worth more. And a lot of people got away with that until they didn't. And so I do speculate in the sense I buy properties in areas that I know can go, there's demand and the rent should be much higher and they're desirable areas. And I think I can add a lot of value to that property and maybe refinance out of the higher amount, but I never put myself in a position where I have to make that happen for the deal to work. It has to pencil out from day one, and all the upside I look at as a bonus.
What's a way you've recently improved your business that we could apply to ours?
Gosh, recently improved my business. Most recently, I don't know. That's a tough one. A lot of the stuff that's in place today are decisions I made a long time ago, with whether it's with property management or just automating different things. I don't know if I've had any great new.
It's all right. You got some good systems.
Yeah.
So tell me the one thing that's contributed to your success.
I think desire and execution. I mean, I think. Not just me, but with anyone. I mean, I wanted it really badly in my mind. I wanted to create financial freedom. I wanted to do it through real estate. I believed I could, and I encourage others. Like, I want people to know, it's not just the initial excitement and desire and dream of wanting it. Cause I think we all kind of get that. But you have to execute. You have to. I mean, there are hard times, and there was difficult tenets when I was self-managing years ago, and there's all these what ifs could happen. But ultimately, if you don't execute on that desire, nothing's going to happen. It's just that desire and motivation is just going to fizzle out, and it's important to take action on those things you really want.
And how do you like to give back?
Yeah. So most lately, I do a lot of 30-minute video calls with people who've reached out. So it's part of the reason I do the podcast. I've been on a lot of podcasts recently, and I really enjoy it. So the podcasts are a way to give back, but I've had a lot of people reach out wanting some level of real estate coaching, and I've chose not to build a business around it, but I have probably done 50 plus calls, video calls with people who've reached out that want specific advice. And so I feel like that's where I can contribute the best with is just give information. Q&A, basically Q&A for 30 minutes on a video call.
Awesome. Well, thank you for giving back in that way, Gabriel. Thank you for your time today and sharing with listeners and myself, and really helping open our minds a little bit to just the benefits of seller financing, and that is an option. We don't have to syndicate every deal, or we don't have to go into it thinking that is the only way, and just helping us to really see that this could be a real good option for us and potentially a better option for some of the sellers. And so thank you again, and tell the listeners how they can get in touch with you and potentially have that 30-minute call.
Sure. Yeah. The best way to get in touch with me is through Instagram, Gabriel R. Hamel, or if you just search Gabriel Hamel, Hamel, you'll find me. My website's hamelinvestments.com, and my email is gabriel@hamelinvestments.com.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.